Welcome to the Equity Market Minute by Bloomberg Intelligence. I'm Gina Martin Adams. Emerging market stocks have had a tough start in 2018, down about 20% from their peak. But will this bleed into domestic market weakness? Let's take a look at a couple of charts. My first chart shows Chinese stocks plotted against the S&P 500. Indeed, the fact that Chinese stocks are down more than 20% from their peak could be a symptom of a broader concern. As you can see here, Chinese equities and the S&P 500 actually tend to correlate pretty closely over time. However, there are only two periods in time in which a major downdraft in Chinese stocks actually led to a downdraft in U.S. equities. That was the late 1990s, 1997-98, and then again recently in 2014-2015. So what was so extraordinary about these periods? Let's take a look at another chart. It turns out that two things happened in 97-98 and 2014-2015 to accompany that Chinese stock market weakness and suggest that it was going to spread to weakness worldwide. The first is the dollar soared. As you can see in 97-98 as well as in 14-15, we saw a major surge in the dollar lead to weakness in U.S. equities. This is not the case today. We could also take oil prices, which in 97-98 dropped about 50% before stocks really started turning over. And then, of course, in 14-15, we saw a major downdraft of nearly 75%. We think that you need to see not only Chinese equity weakness, but also a major surge in the dollar and a drop in oil prices to suggest that emerging market weaknesses are likely to spread to developed market stocks. Thanks so much for joining me for the Equity Market Minute by Bloomberg Intelligence.